Welcome back to Your Average Investor, the channel that looks at my journey through investment, budgeting and finance. Now, it's been around a month since we last checked out my Trading 212 portfolio for individual stocks and shares. So today we're going to take a look back at my Trading 212 account and see how it's developed over time and look at some of the more interesting investments that I've made. I almost doubled up on the money that I'd invested into Tesla, with me selling at their peak and then reinvesting as they fell and then back out the other side as they've grown again over the last week or so. So we'll check that out within the video and everything else in my portfolio. So let's hop onto Trading 212 and find out where my portfolio is sat. Here we are inside my Trading 212 account. The first thing you'll notice is that the value of my portfolio is now £931 and around 40 pence, from £908.42 invested. This sees my investments return to me £22.99, which equates to a rate of return of just around 2.53%. If you remember back to the last video, which was about a month ago, my portfolio was valued at just over £800, with a rate of return of over 12%, seeing my investments return to me around £87. Now, compared to my portfolio now, you'll see that my rate of return is less. However, this is because I have sold out of a position and rebought back in at a lower price. So while the Trading 212 platform only shows me of having £23 in return, this does not take into account investments which I've sold, which I'll show you in a moment. Another thing you'll notice by looking at the graph on the screen is that at some point around 3 weeks ago, my investments actually fell into a negative rate of return, following sell-offs in quite a few companies, especially Tesla, the company that I sold and then bought back into. However, since the news that Apple and Tesla will be stock splitting and also a bit of a rally in the markets, my portfolio is now netting me again a positive rate of return and climbed quite nicely over this period. As usual, we'll take a quick look at how my investments are performing and look in more detail at a few particular investments. So here you can see at the moment at Alphabet Group, I'm down around £1.11, which is around 6%. Amazon has had a particularly good few weeks, with it now hitting over $3,100 per share. This is ever changing, and with the amount of share splits which are being discussed at the moment, it wouldn't surprise me if in the next few months Amazon also split their shares. And you could see them going 10 to 1 here because their share price is so large. If that does happen, I can see Amazon skyrocketing potentially. And obviously that's all to come in the future, so watch this space. Apple have had a particularly good month, and obviously off the back of the news that they'll be doing a 4 to 1 share split, again their share price has rocketed. I've currently got £73 invested within Apple, with £19 of that coming from return, which equates to over 35% rate of return. If we look at Apple, you can see that they've not had a particularly good day, with them trading around negative 0.5%. However, if you look over the last month, you can see that they've increased in value by around $70 per share. If we take a look over a longer time horizon, you can see that since the COVID-19 outbreak, Apple have been going from strength to strength, with them increasing a massive amount since the March dip. They fell to $229 per share on the 15th of March, with them now trading at over $450 per share. It'll be interesting to watch the share price and how it changes and adapts following and leading up to the share split, which is coming soon. AstraZeneca are still kind of sitting fairly level, with me down around 3% on them at the moment. However, they're a great dividend paying company, and over the long term the dividend will outweigh the loss that I'm currently making. AT&T are another great dividend paying company, and whilst I'm down around £2 at the moment, I have had a dividend from them. Not the most large dividend in the world, but it's a great start to my dividend investing journey. Boeing have been fairly volatile, with me being up by around 30% at points to me being down on them this week. However, it's kind of evened out now at around 7% rate of return. And if we have a look into Boeing's week and Boeing's month, you can see that on the month they're ever so slightly down, but they're still above and still ahead of my average buy price, which is the dotted line that you can see on screen there. So if you have a look at that in a little bit more detail, you can see that I currently own 0.8 of a share in Boeing, valued at £109.38. So the average price that I've bought in at is just under $160, with them trading at the moment at around $180 per share. Now, whilst the difference between the average price that I've bought in at and the sell price at the moment is around $20, I'm only seeing a rate of return of £7.30. And the main reason for this is the difference and the changes in the dollar and the pound exchange rate. The main reason for this at the moment is because America are printing lots and lots of money, so the value of the dollar is decreasing, which means that when the value of the investment is changed from dollars back into pounds, I don't see the large rate of return which I would expect. But in the long term, as the dollar becomes stronger again against the pound, this will rectify. My investment in BP is down around 5%, and Coca-Cola is trading fairly flat at the moment. The one thing you don't want, flat Coke. But it's just around 1.5% up for me. But as I say again, Coca-Cola, an excellent dividend paying company, and I've got 1.5 shares in Coca-Cola. EasyJet have been all over the place at the moment, obviously because of everything that's going on with travel and restrictions on people coming back and quarantining. I've been up as high as around a 40% rate of return with EasyJet. But as you can see now, I'm down around negative 4.44%, which again is due to all the things that are going on at the moment. However, EasyJet are one of the largest travel companies within the United Kingdom, and I hope that as long as they can stay strong throughout this period, they'll come out the other side and people want to go away, people want to go on holiday again. So I can see this bouncing back in the future. Facebook and Forum merger company around cancel each other out, with me being up around 150 on Facebook and down around 1 on Forum merger company. Johnson & Johnson, again, trading fairly flat at the moment since I've invested in them. However, again, an excellent dividend-paying company, so I'm not too worried about that. Lloyds Bank, fairly flat again, similar with Microsoft. However, Nikola Corporations have seen a little bit of growth recently. If we look into Nikola Corporations, you can see that over the month, they have actually fallen in value, with me at some points being down as far as 10% from them. However, now, if we have a look at my actual investments, you can see that I'm up just over 11%. Which is quite pleasing to see, and this has happened over the last week. I currently own 1.5 shares in Nikola Corporation, and this is an investment for the long term. They're not going to be paying a dividend for a long time. I see them as potentially a great growth company for the next 5 to 10 years. So I've got 1.5 shares in there now, just to sit there and see what happens. It's only around £45 of my own money, so it's not a massive loss if it goes completely down to zero, but I can't see that happening. I can see this company really blossoming into a successful and innovative company within that area. So we'll see what happens and we'll check back there in the future. Royal Dutch Shell has tanked fairly hard this week. I'm down around £8 at the moment from them. And as you can see, it's not been a great year for them since the coronavirus outbreak, with them back down towards their low initially after coronavirus actually hit. If Royal Dutch Shell dip below £11 or definitely £10.50, I'll be investing heavily into this company, as they will be around for the long term. They've got lots of investments within greener energy. They're one of the largest petroleum companies within the world, and I can't see them staying this low for a long period of time. And as we come out of coronavirus to the other side, I can see this company bouncing back to its initial or its previous heights. So this is one to watch for the future, definitely. I'm not too worried at the moment. They've cut their dividend, which is obviously why the share price has fallen, along with a number of other things. However, they will come out the other side strong, and I can't see this being a long period of low share price. We've then got SSP Group, which is very flat for me at the moment. I'm thinking of getting out of this position just because not much is happening with it, and it's about £12 that I could probably better invest into a number of other investments. So when the markets open on Monday morning, I am considering getting out of SSP Group. Starbucks just slightly down for me. And then Tesla, the most volatile company potentially in the world at the moment. They're up and down more than the roller coaster. You can see that I'm currently around level, and this is since I sold out and rebought back into Tesla. Now, I got quite lucky because I bought in at Tesla initially at around $900 per share, and then I sold up here. So whilst it only shows $1,642, I actually sold when it hit $1,700 per share. So I made quite a large amount of money here. I almost doubled up on what I'd invested initially. So I sold out there and then I bought back into this dip that you can see. And whilst my average price is around $1,600, I did buy into this dip and then continued to buy through the other side here. And you can see at the moment I've got around break even from this investment, with me being up 16 pence. However, over the long term, who knows what's going to happen with Tesla. With them announcing a 5-for-1 share split, this could skyrocket into the share split and then back out the other side, or you could see lots of people get into it and then dump it the other side. So it's definitely a one to watch at the moment, and the only worry I have is that it's it's the largest investment within my portfolio, which for a company that's so volatile may not be the best move for me. However, it's going to be an interesting time ahead to see what happens over the next few months with this share split coming. Again, this will be one to watch in future videos, so make sure you check out all my future videos to see how much I make or how much I lose with Tesla. The final company in my portfolio is Walt Disney there, which is up around £1.50, which again I'm fairly happy with.
If we have a look at my allocation, you can see that Tesla is around 15% of my portfolio, with Boeing around 12% and Royal Dutch Shell at just under 10% as well there. I currently have 20 investments in my portfolio, and it's about a 75-25 split between dividend payers and non-dividend payers. So then, let's check out what I was talking about at the beginning of the video. As you can see, at the moment my rate of return is 2.5%, with that returning to me £22.52. However, as I've already said, I sold quite a lot in Tesla and made a nice profit from them. So where has that return gone, and why isn't it being shown in my portfolio? Well, Trading 212 do things slightly differently. Their portfolio, they only include the investments that you have, and they don't show the growth that you've seen throughout the lifetime of your Trading 212 account. To do that, you have to click on the three lines in the bottom right hand side of the app, and then you have to find history. And what this does is it shows you your orders history, your dividend history, and your transactions history. So here in my all history, you can see that from my sold investments, I've made £62.59. Now, this total return doesn't take into account any return that's currently sat in my portfolio. So if we add the £62.59 to the £22.50, which is currently there, you can see that I'll currently be sat at around £85 in return since opening this portfolio. However, obviously the stuff that's still in my portfolio is susceptible to fluctuations, so that's why it's not included in this part at the moment. Also, I've now received 20 free shares from the Trading 212 affiliate partnership, and that again is not included with my rate of return. It puts that down as me actually investing money, even though I haven't really. So at some point I'm going to sit down and work out how much money Trading 212 have given me through referring people, and see how that equates, or what number I get to after I've added that to my total rate of return, as I think it'll be quite pleasing. I estimate it's around £150 to £200 which I've received from just free shares alone. If we have a look at my dividends as well, you can see that I've made a massive 99 pence in dividends now. From Apple, made 11 pence today. AT&T, from my 2 shares with them, I made 68 pence at the beginning of August. Had a nice dividend from Coca-Cola, and a fairly pointless dividend from Microsoft. But it all counts, and it's all part of my dividend journey. So there we have it. That is my Trading 212 portfolio. If you remember back to a previous video that I did, I said that by the end of my second year investing, so May 2021, I wanted to hit £1,000 invested within this portfolio. You can currently see that I'm at £908.42, so I'm more than on track to meet that target, which is excellent and something I'm really pleased about. Also, I've now received all of the free shares that I can on my Trading 212 account. So what I'm going to do is give something back to the people and my subscribers who have been watching my videos over the last few weeks and months. So I'll talk about that a little bit more in a moment. So at the end of this portfolio video, you can see that my portfolio is valued at £931.08, just under a 2.5% rate of return, and that's £22.62 in cash returns to me.
So there we have it, my Trading 212 portfolio. As I've said, I'm fairly happy with how it's ticking along at the moment, with me making a cumulative return of around £85, and that's including my current portfolio and the investments which I've sold, so my actual physical gains. I'm starting to see some dividends come in now as well, which is really pleasing to see, as this is income which I can really quickly reinvest to make my money work harder for me. As I said in the video, I've now been given 20 free shares from the Trading 212 referral scheme, which is the maximum amount I can be given. And as I've now hit 500 or nearly 600 subscribers, which is crazy to me, I'm going to try and do something to give back to the people who watch my videos and subscribe to my channel. Now, this is an idea that I've got from a YouTube channel that I watch personally. He's called Paul Briscoe. I'm sure you've probably heard of him because he's kind of exploded onto the investing scene within the United Kingdom. So if you haven't checked out his videos, go and check him out. So what I'm going to do, if you are a member of Trading 212 and you've got a referral link, just pop it in a comment, and what I'll do is I'll attach somebody's link under each video to my description. So hopefully people will start to make some extra money by people signing up through their own referral links on my videos. So as I've said, pop them into the comments below. I'll pick one each week, each time I do a video, and I'll post it into the description, and hopefully you'll be able to start making some extra money yourself. The only conditions of this are that obviously you're a subscriber to the channel, you give the video a like to help me out, and obviously you need to comment that link below as well. As always, if you've enjoyed the video, please do subscribe if you haven't done already to catch all my future updates. comment on the video and also give it a like to help push this out to as many people as possible. I've reached almost 600 subscribers now, and I'd absolutely love to reach 750. I never thought I'd reach 100, to be honest with you, so the fact that I'm here now is really, really pleasing. So thank you to all of you who subscribe to the channel and helped me get this far so far. And that's it for today. As I've said, that's my trading 212 portfolio. In the future, we'll hop back into my Vanguard account because we haven't checked that out for a while and it's seen quite a nice bit of growth recently. So we'll check that out in a future video. But with that said, I'll catch you in the next one.